A presentation about the financial audit report on rail and ports entities for the 2015-16 financial year. This is report number 6 for 16-17. Please note that this is a summary of the report to Parliament. The full report can be read on our website. We issued unqualified audit opinions for all rail and port entities' financial statements for 2015-16. This included Queensland Rail, its subsidiary Queensland Rail Limited, and the 4 ports corporations, being Far North Queensland Ports Corporation, known as Ports North, Port of Townsville Limited, North Queensland Bulk Ports, and Gladstone Ports Corporation. Issuing an unqualified audit opinion on their 2015-16 financial statements means that they complied with the legislation and accounting standards, and the financial statements can be relied upon. Only Ports North did not meet the agreed timetable to provide a complete set of the financial statements for audit. Gladstone Ports Corp made significant adjustments to their financial statements after presenting them for audit. Despite these issues, the financial statement audits of both Ports North and Gladstone Ports Corporation were completed by the legislated deadline. Our audits identified internal control deficiencies which were referred to management to action for all entities except Ports North. No control deficiencies were identified in the audit of Ports North. One significant internal control deficiency was reported to Gladstone Ports Corporation. Our audit identified a range of inaccuracies in spreadsheet calculations and inputs used in the model that calculates the value of assets. There was a lack of data validation and quality check of the inputs and calculations in this model. As small changes in inputs and calculations can have a significant impact on the calculated asset value, we alerted management to this risk, as this may lead to material misstatement of the property, plant and equipment balances. We undertook sufficient audit procedures to conclude that the values were materially accurate. Gladstone Ports Corporation management are taking steps to improve their asset valuation processes. We have raised 41 other control deficiencies over the past 2 financial years that need to be addressed by management of these rail and port entities. Although these issues are not classified as high risk, these matters should be resolved to ensure a good control environment that supports high-quality financial reporting. The majority of issues we have reported to management relate to control activities. These are controls that ensure that management directives are carried out through organisational policies and procedures. Control activities help prevent errors entering financial statements. I'll now turn to the financial results. While revenue and expenditure has remained steady from last year to this year, total profit for this sector fell by 6%. Coal represents nearly 70% of total tonnage transported across the 4 ports corporations. We have observed consistent expense levels at the whole of sector. However, Queensland Rail did incur an increase in salary and wage costs of $44 million from the previous year. This increase was in part due to enterprise bargaining agreement outcomes, growing employee leave liability benefits, and the addition of 180 new full-time equivalent employees. We have also observed that in general, these rail and port entities are able to reduce expenditure in times when revenue growth is static or falling, and thereby maintain profitability. Declared dividends increased from 80% of net profit after tax in 14-15 to 100% in 2015-16. Some of these dividends will be funded through new borrowings. The credit rating of the sector is not expected to decline as a result. Debt in the sector will grow by an estimated $675 million next year due to the impact of the shareholders' debt action plan. Publicly owned ports entities in Queensland face a number of financial challenges. due to the changes in the world economic demand for commodities, especially coal. Immediate sustainability measures for this sector are sound. However, sustainability risks are influenced by understanding where development and maintenance of infrastructure needs to occur using existing asset portfolios and managing environment risks. Increased borrowings means increased interest costs and pressure to maintain profitability targets. The rail and ports entities need to continue to strive to resolve ongoing internal control deficiencies. Some entities need action to improve the timeliness and quality of financial reporting practices. Thank you for listening. We trust this presentation has been of value. For more information on the issues, opportunities and recommendations highlighted in this summary presentation, please see the full report, Results of Audit, Rail and Ports, on our website under Reports and Resources at qao.qld.gov.au.